So today we're going to cover one of the most misunderstood benefits so that you can maximize your results. You ever say you're just going to keep your FEHB the same because it's too much work to research the rest? I know, so do thousands of other federal employees. But over the years of working with feds, we've realized that many are leaving money on the table by not maximizing their benefits. And make sure to listen till the end where we cover the big debate of Medicare versus FEHB. Okay, so the first thing you need to make sure you have down are the small details. So for most of the plans, the government covers about 3/4 of your FEHB benefit, and you come in with the premiums for the rest. Now, most couples that are married have one federal employee and the other works in the private sector, or maybe they're a full-time parent, or maybe they have a side business. The point is, only one of them has FEHB, and in most cases, that means you're doing the self plus one or the self plus family. But there's increasingly more families with dual fed status, which means each of you has FEHB available to you. And something you might want to consider is, rather than doing the self plus one, take a look and see what 2 self plans would cost. Sometimes you'll find that 2 self benefit plans is cheaper and more economical than a self plus one in a circumstance like this. But obviously, if you have a family, it makes it a little more difficult for you to go about doing this. But this can help you save some money, and it's been helpful to a lot of our clients. This also goes with if they have a private health insurance plan through their work. Maybe you guys can have individual plans. Just understand how FEHB coordinates for retirement purposes. Now, the other dual fed consideration is that if you are retiring sooner than your spouse, or maybe your spouse is retiring sooner than you, the way FEHB premiums are charged post-retirement is that it's an after-tax basis. When you're working, it's a pre-tax expense, so you get to have that as a tax write-off. So if one of you is retiring, you may consider switching that person back to the employee because you get tax-free health insurance. Now, eventually, FEHB is going to be post-tax. That's just the way that it works in retirement. But in the meantime, you can save yourself a pretty nice chunk of change just by going back and forth this way. Okay, so now that you know which category you'll be using to cover your family, how do you pick the best health insurance type? There are literally hundreds of options under FEHB, and so how do you look through all of those to determine which is the right one for you? Well, we always recommend for folks starting with what kind of plan fits your family's needs the best. For instance, maybe you have to regularly see specialists, and so if your plan requires that you see your primary care physician first, maybe that's additional work and cost that you don't need and not best for you. And this is one of the reasons we put together our free annual open season guide. We get all of these kinds of questions annually, every single year, right around open season. And so we thought to put together about an 11-page PDF that talks through all of these different considerations. And what you can do is you can download this free PDF and use it with OPM's comparison tool as you're renewing your health insurance. So when you're looking at plans, you have to know what your different choices are and how they influence what kind of benefits you're going to get. Some plans have higher coverages up front with higher premiums. Other plans have lower premiums but higher out of pocket. Some plans are more restrictive than others, and they force you to go to a certain network of medical professionals. And the really important thing to note is that there's changes that happen every single year. So as you go to renew your insurance, you need to make sure that what you thought your insurance was last year and as you understood it is still going to remain the same. Did your doctor possibly stop using that health insurance? We've seen that happen before. And this is why open season is so important, because each year it gives you a chance to make sure that what you have elected still meets your needs. Another thing is that sometimes health insurance carriers will stop covering a specific prescription. So depending on what you're taking and what kind of treatment you need to just make sure that you're still covered under the plan that you have. Don't automatically assume that by renewing that it's going to be covering those things that you still needed. Okay, the next thing you need to know is that you might actually be leaving money on the table by not using HSAs and FSAs. An HSA and an FSA are both types of accounts that when you put money in them, they're a tax deductible, just like if you were making TSP contributions. But then you can immediately use the money for qualified medical expenses, and that money gets to come out tax-free as well. Now, a high deductible plan with an HSA may not be appropriate for everyone. If you are young and healthy and you don't really use a lot of medical insurance, then that can be a good plan. But really, the tax-free component is the benefit that is most appropriate for folks. And so you have to understand the costs of using a high deductible plan. Now, with an FSA, it is a little different because it is a use it, or lose it policy. You have a little bit of extra time to be able to use the FSA money if you didn't use it at the end of the year. An HSA is different in that you can continue to roll that money forward. So some people keep money inside HSAs for years upon years upon years. That money gets to be invested, that money gets to grow tax-free, and over time can be available to you for all kinds of medical expenses totally tax-free, which is a really nice benefit. So if you're considering using an HSA because you have a high deductible, put in as much as you can, maximize that thing, because you're not going to lose that money. Even if you eventually end up not needing all of that money for healthcare, at some point you can actually roll that money into your regular IRA without taxes as well. Okay, the next one is saving money with dental and vision. There are some FEHB plans that actually have some dental and vision built into the health insurance. Now, you should not be picking a health insurance plan based off of vision and dental. That's what the separate policies are for. FEHB health insurance, you should be looking at your regular health insurance. However, if it happens to have some additional coverage for vision and dental, then maybe you don't need vision and dental policy, depending on how much it's covering, or maybe you don't actually need to do the higher level dental and vision. One of the mistakes we see people make is they always get the higher dental and vision. Well, that's not necessary that you do every single year. There might be a year where you need to do some dental procedures, or you're gonna need to order new glasses or things like that. Those are the years that you wanna be increasing your dental and your vision insurance for that time period. Again, the reason open season is great is next year you get to reduce that insurance and not pay as much if your needs are less. Most of our clients have found that they did want the additional dental and vision, even if their FEHB plan had some of that coverage, simply because they were better off by doing so. There was more coverage. There weren't going to be any surprises coming down the line for them. Okay, this next one may be one of the most contested of all time, FEHB versus Medicare. As a federal employee, you have various options. You can either do just FEHB, you can do just Medicare, you can do the combination of the two. So you really have a lot of options that you need to analyze and see what best fits your needs. Now, like we tell our clients, this choice is highly personal and it's dependent on quite a few factors. The first thing you need to know is that your FEHB plan is no longer primary. Once you elect Medicare, Medicare becomes the primary carrier for your health insurance. However, Medicare only covers roughly about 80% of those expenses. And so even for folks in the private sector, they have to buy something called supplemental Medicare insurance. And FEHB happens to be the perfect supplemental Medicare insurance. And in some cases, that supplemental FEHB actually is cheaper than if you were just going for FEHB. So it's not like you're going to pay the regular FEHB premium plus pay the Medicare Part B. There is a cost for Part B and there is also a cost for supplemental FEHB. However, a lot of plans, particularly Blue Cross Blue Shield, they have Medicare supplemental specific policies, so the premiums are slightly lower. They have some additional benefits for you, like some reimbursement for out-of-pocket and various other things. However, as we mentioned, it doesn't come without cost. Part B for Medicare, which is the health insurance part, has monthly premiums, and these premiums are based off of what your taxable income is. Remember, as a Fed, your first pension is fully taxable, your Social Security is mostly taxable, any money that comes out of traditional retirement accounts is taxable, and so there's capital gains to worry about, all kinds of things that you need to worry about that could be increasing your Medicare costs. So a cost to benefit analysis needs to be done. The other factor to know is that if you go on Medicare, does your doctor accept Medicare? We've seen cases where some doctors just don't. They have the option of not taking Medicare insurance. And so if you're gonna go on Medicare, make sure you do the research before. And if you're interested in more information about FEHB versus Medicare, will you let us know in the comment box? Because if we get enough interest down below in the comments, we'll reshoot an entire series on Medicare versus FEHB, all of the different considerations, people's experiences directly from our clients, all kinds of things that can be really helpful to you as you make the decision for yourself. And if you want any additional help in planning your retirement or other various topics about your FERS benefits and general financial planning, visit our website. There's tons of free resources on there. There's a free newsletter you can sign up for, and you can send us a message directly if you need a little bit of help. So check that out. I think it'll be helpful to you. Until next time, stay wise and stay wealthy.